You saw it on your screens yesterday. Technology stocks took a big beating once again as investors dumped Apple, Facebook, and other former market leaders. The Nasdaq Composite tumbling more than 3% yesterday. Big worry, of course, is Apple, which nearly went into bear market territory. Let's bring in Michael Lee, Altium Wealth Portfolio Manager and Market Strategist, and Lou Basenese, Founder and Chief Analyst of Disruptive Tech Research. Guys, good morning.
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 Okay, Lou. I mean, it was a lot about Apple yesterday. Their suppliers as well taking a hit, them pulling back on production. It's about the iPhone. What's going on with Apple? And do you think that this pressure is like a kind of a sign of things to come for the rest of the year?
Look, I think this is all a lot of anticipation of what might happen in December, but December hasn't happened yet, right? I mean, the iPhone, it's all about the holiday quarter, and we haven't even gotten those sales numbers yet. So, you know, the intro with Jonathan saying the economy is all about the iPhone, I think that might be a little bit of a stretch. This bull market is all about the iPhone. So how the stock performs definitely is influencing the rest of the market.
Well, but Michael, Apple was down is down so far 15% for the month of November, and it wasn't just Apple. I mean, we're talking about, you know, Facebook, and we're talking about the FANG stocks in general. I mean, this whole sector, which had really been a big piece of the bull market, folks are really starting to get nervous about these riskier companies, and they're really hitting the technology stocks hard. Why?
Well, what we've done is we've entered a new volatility regime, which means the volatility we've been having is very likely to continue going forward. When you have more volatility like this, traders and institutional investors have a lower VAR, value at risk, that they can play with. So their pocketbooks are smaller, and they're less likely to be able to ride these waves in and out and, quote unquote, buy the dip. So I don't think this is going to stop. And what I just say about Apple is we've been hearing supplier concerns for years and years and years now. What feels different this time is that Apple's going to stop giving us specific iPhone unit sales. Yeah. So that lack of transparency combined with these concerns, combined with the lack of growth we've kind of seen from them the last few quarters, just makes it feel a little bit different. I mean, Lou's absolutely right. We'll see, but I don't know.
You had Lumentum, you had Qorvo. Those are some of the suppliers all under pressure. You know what, Lou, I want to ask you about something else, though. You know, obviously another big story here is trade concerns between the United States and China, and what happened in APAC, and the tension, frankly, between the U.S. and China. There's if you look at like a chip maker like NVIDIA, sure, they have a stronghold and presence in the United States, but China is really, say for NVIDIA, that's their biggest market. You've got Intel sells big into China. I mean, these technology companies could be really at risk if we don't get anywhere with the Chinese and things get worse, not better.
Yeah, no, I agree with you, especially for these chip manufacturers. We're in a pressure cooker right now as the trade tensions continue to mount. We need the relief valve to be released to see these stocks come back into favor. I mean, you mentioned NVIDIA, it's off 50% from its highs. So, you know, that's a description for me of a tech wreck. The others is, you know, we're seeing a slowdown in names like Apple, but we're starting to get to a point where some valuations get attractive. You know, Apple below 15 times earnings, NVIDIA is starting to come in line below 20 times earnings. If this continues much longer, I think you're going to see some value investors step up into the tech sector.
But you can't blame NVIDIA or Intel or any other company that's supplying China, Michael, because, look, they want to overtake us when it comes to artificial intelligence. They've got their big long-term plan. And these companies are saying, look, if this market isn't going to be the U.S., it's got to be overseas.
Yeah, look, the trade tensions with China, they're not going anywhere for a very long time. There's a lot more going on here than a tariff here and there. So I'd expect that to continue to be a factor in all of this. And then just to touch on one of Lou's other points is the valuations of some of these are getting quite reasonable. So Google, we're looking at 20+% revenue growth, so top line growth, you know, trading at roughly 20 times earnings. So at some point, a lot of these FANG stocks are going to get cheap. I don't know that Netflix will ever be cheap, but some of the other are.
Oh, no. Michael, I'm glad you brought it up because, look, it's about opportunity. If these stocks fall to certain levels, a lot of folks, like you were saying, time to look at a little buying. Michael and Lou, we'll leave it on a positive note after that sell-off yesterday. Guys, thank you very much.
Thank you.
Thank you, Cheryl.